The things you do for yourself are gone when you are gone, but the things you do for others remain as your legacy, unknown. On today's episode, we're going to talk about legacy, but more specifically, how to leave a legacy for our families when we are no longer here. Welcome to the Stitched for Success podcast, where we are teaching business and life lessons that will help you launch, grow, or scale your creative business. I am Monica Allen, and I'm a wife, mom, daughter, entrepreneur, author, friend, lifelong learner, and host of this podcast. For over 8 years, I was stuck in corporate and dreamt of escaping. Creating a side hustle with just $700 and having taken the leap over 15 years ago, we have since grown multiple six-figure and seven-figure brands. Being an entrepreneur for over 18 years has afforded me many successes and a few failures. I want to share those with you so you can grow and be successful in your business. We are moving towards the end of Black History Month, and me being a Black woman, a Black mom, one of the things I decided earlier this year is that my life word was going to be legacy. So for many of the things I do and decide to do going forward, I think about it through the lens of legacy. What legacy I want to leave behind when I no longer walk this earth. I think I have actually thought this way for years, since I was in my 20s, but this year I actually decided to put a word to it, a goal behind it, or goals behind it. So today we're going to talk specifically about financial legacy. This podcast is intended for everyone, no matter your race, your gender, your ethnicity. However, as we are in the final week of Black History Month, it gives me pause and makes me think about some of the things that ail the Black community. And one of those things that I can recall while growing up is the lack of financial resources when someone passed away, the lack of wills being made, families being left with not enough to survive the loss of a mother or a father. So on today's episode, I want to share with you my interview with a financial representative from Northwestern Mutual, which is one of the nation's premier financial services firms. Jeff Cooper's here. He is a graduate of Emory University, a former member of law enforcement, and now a passionate financial manager who is focused on helping his clients not worry about money by helping them create a comprehensive financial plan for their lives. I recently contacted Jeffrey because I wanted to get another term life policy put into place. Being a risk management and insurance major, there are some basic things that I know about life insurance, and one of those things is the older you get, the more expensive it gets. So though I have a term policy that's been in place for about 15 years, I thought I should go ahead and get another policy in place while I'm in a lower age band. And as I was speaking to Jeffrey, we got to discussing legacy. And though none of us like to think of us no longer being present here, it is a reality that we all have to face. And with that thought, I want to make sure that my family does not suffer financially, as I'm certain they would already be suffering emotionally if and when something happens to me. So I wanted to invite Jeffrey onto the podcast because I think as an entrepreneur, as a business owner, it is extremely important that you make sure you have all of your ducks in a row, and not just your business ducks, but also your personal ducks in a row. So with that being said, Jeffrey, I have some questions for you.
Looking forward to it. What you got?
All right. So as an insurance professional, tell us, why is it important to have a life insurance policy in place?
I think that's a really good question. A lot of times when people think about planning their finances and securing their future and their family, they think about everything else but life insurance or any insurance, right? They think about investments. They think about making sure that we accumulate wealth, but they give very little thought to making sure that, as you mentioned, our risk management plan is in place. And the cornerstone to any plan really starts with protecting against what could go wrong. And so when we think about securing a financial future, life insurance is a cornerstone to that picture. In fact, for a lot of my clients, I won't even engage in talking about wealth accumulation if we don't have a risk management plan in place, because we really don't need to start thinking about all the things that could go right if we haven't put a plan in place to protect what could go wrong. And when you think about the importance of life insurance, as you mentioned, nobody wants to think about it or talk about it. But there's really kind of three key things that come to my mind. And one of that is to protect your family, right? To provide for the survivors in the event of a premature death. All of us have people that we love. And like you mentioned, if something happened to us, hopefully they're going to be mourning our loss. But compound that with the fact that there may be a financial hardship. and that we could have avoided if we put some planning in place, it really is a no-brainer to go ahead and put some life insurance in place. Um, Also, as you also mentioned, and as we talked about during our last conversation, is legacy. I mean, it's one of the quickest, easiest, most efficient ways to leave real legacy to our loved ones, to whoever's surviving us. And so when we think about the fact that we can leverage a little bit and leave a lot, it's one of the quickest, easiest ways to really, really create generational wealth in ways that you might not otherwise. Now, a lot of people have different views on legacy, have different perspectives and different uh, schools of thought as it pertains to leaving a legacy, and it means different things to different people. But for whatever that may mean for you, life insurance is a really easy vehicle for that. And then there's also the fact that, there's also living benefits to life insurance. I mean, term insurance typically is what it is. But when we start talking about different other types of permanent insurance, whether that be whole life or some other types of insurance, there's also kind of a lot of living benefits that are there for the person, even while you're alive, whether that be a cash reserve for you to help you with different needs that may arise during life, to be a supplement in retirement. There's different things that we can do with life insurance, both when you're gone and also while you're here. So it's really, really an integral part of any financial plan. And it's really, any plan is incomplete without it.
And that makes sense. I can remember growing up, I grew up in a very small town. And when I was growing up, the policy man would come by to collect a little change from people to for the life insurance policies that were typically, $1,000 or $4,000, not a lot. And I do remember so many conversations of people not having enough to bury a loved one. And that to me is just really sad. So, as how do we determine how much life insurance we should purchase?
So that's actually an excellent question, and one that I get all the time. Um, there's a couple different schools of thought. Some of people will say, let's just do a multiple of income. And, if my income is 50,000, I'll say, 5 times my income, that's how much I need, which may or may not be accurate and may or may not work. Um, a lot of people just pull a random number and just say, that sounds good, 250 or 500, that sounds good. What I really try to do with my clients is sit down and say, let's think about what do you want to see happen? Not just if you passed away, but most of us have a vision for our life. And so this kind of gets around that having to have that morbid conversation of if I die. But think about your vision for your life and what do you want to see happen for your family, right? Over the next 10, 15, 20, 30, 40 years. I want to see my kids go to school. I want to see our debt get paid off eventually. I want to see us travel and go on vacation. I want to see our family be able to do X, Y, and Z, whatever that vision is for your life. And then ask yourself, now, if you weren't here, you want to still have those things happen? For most people, they're going to say yes. I still want those things to happen. Okay, so then now we know this is the vision that you want to secure. This is what you want to have happen. Now we can kind of back into the amount of capital that it's going to take to make that happen. So for a lot of clients, most of them, we start with, okay, let's just say $25,000 is what we're going to need for just funeral expenses, right? Because it costs more than people realize to have a funeral. Unfortunately, it's an expensive proposition. Then, okay, we want to make sure that we have enough money to pay off any debt. And we'll go through and calculate what's the total number of outstanding debt. Some people say, I want to make sure the house can be paid off. Whether or not she or he decides to pay the house off after I'm gone, at least they'll have the money to do it. They can if they want to. And
Right.
any other outstanding. So we'll kind of figure that number. Then we may say, okay, I have 3 kids. I want to be able to have at least $100,000 a kid, to pay for school or whatever the number is for that person. Um, and then a large part of it is if I'm gone, I don't want my family's lifestyle to have to change. I don't want them to have to stop doing things that they used to do just because daddy's not here anymore or mommy's not here anymore and we don't have their salary. I don't want to have to tell little Johnny, sorry, we can't go out to eat at your favorite restaurant, or sorry, we have to pull you out of that private school that you love, or sorry that we can't do the things that we promised we were going to do because daddy's gone and we don't have that money anymore. So for a lot of people, that's a real big conversation of wanting to replace my income for a certain period of time. For different people, that period of time may be different. Some people say, I want to replace it for 5 years, and then it's on the spouse to figure it out. I want to replace my income for, In my case, I want to replace it for 30 years. You know, usually my recommendation is let's at least replace your income until the youngest child is out of the house, and maybe through college if that's important to you. That way we know that at least your spouse, who's now having to adjust to life without you, can literally make it as though you were still here. I always joke with my male clients because they always say, "Oh, she'll marry somebody else." Well, if you don't want her to marry somebody else, keep taking care of her from the grave, and I guarantee you she won't. um, but that's one of the things that we really want to look at is how can we find a number that allows you to achieve all of your same goals and your family to achieve all of their same goals, even if you're not here. And we kind of back into that number that way. And sometimes that number shocks people. That might end up being that we need, 1.5, $2 million, $3 million. And that's when we go the term route because we can get a lot of term coverage generally for a lot less money. And so we want to make sure that we at least get you the adequate coverage to take care of your family.
Right. That makes plenty of sense. And I know one of my biggest things that really, I mean, again, being an insurance major, I'm all about the insurance here, long-term disability, all types of things. But one of the things that really scared me was thinking about my kids not being able to go to college if something happened to me, thinking about them not being able to study abroad or having some money to invest in their own business or a home. And so that is one of the things that really drives me to make sure that, I have life insurance in place and my spouse also have a policy in place. So what is needed or what do you have to do to get a policy put in place?
Well, fortunately, it's not like that when you were growing up and they came around. It's all electronic now. You can go online and there's all kind of places now, policy games, you can find something online. My recommendation, maybe I'm somewhat biased because this is my profession, but
Right.
I do really recommend sitting down with a professional. And the reason that I say that is not just because I want somebody to meet with, but really it helps you figure out what is the right amount of insurance, what is the right type of insurance. We can do all kinds of things to get you not just in the right price bracket, but what's going to be the right situation for you now and down the line. And there may be things that you're just unaware of that when we really sit down and figure out what is it that you want to see happen, we can figure out what makes the most sense for your situation because every situation is so unique. And you just don't necessarily get that by going online. Now, depending on your need, that may work for you, but I
Right.
really recommend sitting down with somebody. And our process, for example, at Northwestern, I think most insurance companies are pretty much the same way. I mean, it's all electronic. We do the application electronically. We'll send you an electronic health questionnaire. We submit it electronically. We take the payment electronically. And the only thing that we do in person is if they do request a medical exam, then we will send the person out to you either at your home or your office to come meet with you. And there's COVID restrictions in place to try to mitigate any kind of health concerns. But that's really the only kind of in-person activity that you have to worry about. So it's still very easy, just as easy as it would be, but you get the benefit of making sure that you have the right product, that you didn't get the wrong situation for your family's needs.
Yeah, I think definitely having that number is so important because, you may be thinking about one thing, but there may be aspects that you're not thinking about, especially like you mentioned the debt part. I didn't really think about the debt aspect. I mean, I don't have a lot of personal debt, but it, like you said, everybody's situation is different. So thinking about those things is very important. And you might not think to calculate all that if you're just going online to do it. So having somebody sitting down with you could definitely help with that. Are there other things, especially as a business owner or as an entrepreneur, we should think about when it comes to insurance and investments that will leave a long lasting legacy for our families?
I think, for business owners, it's especially crucial because your business is your baby. You've heard that before. And you invest so much blood, sweat, and tears into making sure that every aspect of your business is successful. Sometimes to the to the chagrin of your personal life, but you still make sure that that business is successful. And the last thing that you want to do is to leave that baby unsecured. But when it comes to business planning, when we deal with most businesses, there's kind of four key areas, if you will, um, that we really try to help business owners address. One of those is for the business itself. So, you mentioned having disability insurance, and that will protect you, right? That will make sure that if something happens to you, that there's income coming to the Allen household to compensate for your loss of salary. But one of the things that we also encourage business owners to think about is disability overhead expense. If something happened to the business to you, and every business is unique, so you really have to sit down and see if it makes sense for each business. But if something happened to you and you're the primary person that drives revenue coming into the business, well, then overhead is impacted, and so this pays the business for that period of time while you're disabled. So I use that a lot with people like attorneys, for example, where they have overhead at the office, but if they can't work, there's no revenue being generated, right? And
Right.
so this pays the business, and this will pay you in the meantime while you get back and figure out what's going to be the future. Then also thinking about key employees, right? So there's key employee disability, there's key employee insurance, and a lot of business owners think of themselves as the key employee, and they may need to insure themselves as a key employee. But sometimes there are other key employees that when we sit down and discuss it, they realize if this person were gone, whether it be by sickness or a premature death, that would severely impact our operations. Our customers, our vendors would be worried if we didn't have this person in place. And so we want to put insurance on that person to ensure that the business can continue to operate. So that's kind of where we look at taking care of the business. And then we, like you mentioned, taking care of the business owner, right? We want to make sure that if something happens to you, that you are well taken care of. But then also for most business owners, that eventually you want to leave the business, right? Or you want to be able to pass it down to your family or somebody. There's some succession planning, hopefully, that's going into that. And, we work with them on the succession planning piece, but also helping to fund that succession plan. So insurance is a efficient vehicle for that. And sometimes that may be if there's business partners and there's a buy-sell agreement, or what does that buy-sell agreement look like and how is it funded? Um, and a lot of people don't give a lot of thought to that. We were actually working with a client. It's a business, and there's three owners. There's two majority owners, and then one was like a minority owner. Well, the minority owner and one of the majority owners get along, and they hate the third guy. Right?
Oh, wow.
So they didn't want anything to do with him. He's not a part of these conversations, which was interesting. But when we started talking to them, they were like, "We don't need any of that. We're good." And so we asked the minority owner, "Well, what happens if your buddy dies, right? And now all of a sudden you're working for the guy that you can't stand because y'all haven't put any planning in place to fund how this is going to go." And then they realized we need to put some planning in place
Planning in place,
around
right?
succession planning. And then, of course, just lifetime exit planning. What is the plan for what happens when you decide that you're ready to exit from the business? And how does that look? Does it pass on to the family? Does it pass on to, a sibling or child? Another example, we're working with a family business, and the son is going to inherit the business, run the business. The daughter doesn't want anything to do with it, but her cut is supposed to be $7 million, right? So no matter what, when daddy dies and the business goes to brother, she's got to get $7 million. Now, either he has to have $7 million in the bank, or some kind of way to give her, but like she takes her seven and she's gone, she's done. Well, the easiest way to fund that is obviously get a life insurance policy on dad. When dad dies, it pays her $7 million and he's done. Um, and at the time, nobody could figure this out because they're sitting down with the attorneys that should we could create a trust? Should we do this? Should we do that? And it's like, wait a minute, why don't we just do this? Make her the owner of the policy so that we don't have to worry about somebody changing out the beneficiary. They're the business is the payer. It's a small expense, based on the revenue the company was generating, and we could just take care of her. And we've created this exit plan for that. So that's kind of taking care of the business owner and their needs. We kind of talk about key employees, but also key employees, different benefit plans that may be available to key employees, because the last thing you want to do is lose a key employee. And so you want to make sure that, all of this is ultimately taking care of the business, right? But the last thing you want to do is lose them because somebody else could offer them a better benefit, or, some other bonus or some other incentive to get them to leave and jump ship. And there's all kinds of things, whether it be, bonus plans, or, disability wage continuation plans, or, a life insurance plan that the business pays for, that's for the key employee that they get to keep if they stay to a certain point. There's all kinds of different things that we can do. And then, of course, the plans for all employees, right? The group life, group DI, retirement plans, health and wellness plans, all those types of things. So really, when it comes to the business planning piece, insurance is a huge component of all of those aspects to making sure that the business can continue to stay afloat if something happened. Because one thing that I think all business owners realize is risk is real. you know, as an employee, and I've learned this as an employee, somebody else bore that risk and I never thought about it. But as a business owner, nobody's taking care of you. It's all on
Right.
you. So, we want to make sure that the business is taken care of because you've invested so much in it.
Wow, you said a mouthful. And so I need to contact you again because I don't have all this stuff. And so I kind of need to think about this, especially succession planning and business disability. Didn't even know that was a thing. So,
Absolutely.
okay. We will talk. We will talk some more. But thank you for sharing all of that with us for sure. Wow, that's a lot of things that I need to think about. So I know you were a police officer for a number of years. How has this change in career impacted you?
Oh, wow. Where do I start? Well, it has opened my eyes, as I kind of just mentioned, on a whole new level. For, 12, 13 years, I've really only ever worked for the government, right? I think I worked for a private police department for a few, like maybe a year or two. But my government check was always coming. And whether I really applied myself or didn't, it was going to come. If I didn't work, it was going to come. If I didn't produce, my check was coming. Um, but it was a great job. I enjoyed it. But what this job has really done is really helped me to see what I'm capable of doing myself, right? And that's part of the reason that I really wanted to branch out. Besides being able to help people and make a difference, it really opened my eyes to seeing what you can do if you trust yourself, right? And in fact, I told my supervisor when I was leaving, is I want to bet on me. I want to see what I can do. And I had gotten to a point in life, and this may be beyond the scope of your question, where I was just kind of tired of being told my value or dictated my worth, um, and waiting on somebody else to do something for me or to open a door for me or to give me an opportunity. And I realized also that what I want, you got to go get, right? And so now I realize it's easier said than done, but I wouldn't have it any other way. It is the best thing that has happened to me. I probably work more than I did, but it doesn't feel like work. Because I'm doing it for me. I'm not doing it for anybody else. I'm doing it for my family, I guess you could say. That's really my biggest motivation. But I like the potential. I'm not there yet, but I like the opportunity when the time comes, hopefully in the near future, to create a job for somebody else, right? And to be able to now be a producer beyond the service that I provide, but a producer of employment and helping that aspect. So um, it has really helped me to see entrepreneurs in a different way, and realize the struggle that they go through. Because sometimes we can glorify it and think, they got it made. It's like, oh, okay. There's a whole lot that you don't see behind that. A whole
Exactly.
lot of sleepless nights, a whole lot of stress. You know, the perks that you think are there are not what you think they are.
Right. You're right.
But I don't know an entrepreneur that would change it either. I mean, most of them are like, I love what I do, and I see that now. So
Yeah, I'm definitely in that boat. I have definitely had lots of sleepless nights. I work more than I ever worked in my corporate job. But I don't see it as work. I enjoy what I do. There are moments when I'm going through things and I'm like, gosh, I wish this wasn't on my plate. But overall, I love what I do. I enjoy the services that we provide and just, you know, getting people excited about what you are providing for them and solving their problem, solving their issue. So I enjoy it. I wouldn't change a thing, but it is stressful. It can be stressful. So, um, so do you operate more as like a sole proprietor, or do you have your own business name underneath Northwestern, or how does that work? I'm kind of getting more into the how it's structured now, but
So Northwestern is interesting. Northwestern, we like to say that you're in business for yourself, but not by yourself.
Oh, I
So each
love
of
that.
us are really our own sole proprietor. And as you go and decide how you want to take your business, because it's really your business to decide how you want to take it, there's different avenues. You can partner with somebody, you can create a partnership group, you can create a private client group, and still have the backing of Northwestern, because most clients really do like to have that big name behind it, but still have that personal service. Um, and so for me at this point, I am a sole proprietor. And so I hire my own staff, I pay my own bills, I get compensated directly. Um, However, there's a lot of opportunities to continue to move and grow your business as your business deems necessary. So, as you could create more capacity, you might need to expand your team, and that's on you to expand that team and create those jobs, and you pay them out of your your business expense. Um, but that's kind of the Northwestern Mutual model, is that we are each our own business, but then we have the ability to lean on each other. We have the ability to lean on Northwestern, and not just for their products, but also for their expertise, their services, their value. So it adds a lot of value to what we're able to provide to the client.
That's fantastic. I like that a lot. I like what you said about one, you deciding to put your trust in yourself, but also I like their tagline it totally left me just now. But what did you say their tagline is?
Oh, you're in business for yourself, but not by yourself.
But not by yourself. I like that. I like that a lot. That's fantastic. Well, Jeffrey, I appreciate you coming to talk to us about the importance of life insurance on a personal level, but also getting into the business side of it. Is there anything else you would like us to know or things we need to think about as business owners?
Well, as business owners, make sure you manage the risk. Make sure you manage the risk. Just because you ignore it doesn't mean it goes away. You can either retain it or transfer it. And a lot of times, what I have realized, whether it's for the business or for the person, everybody loves insurance, we just don't like paying for it. We can figure that piece out, but I'd rather us figure that out and have that conversation as opposed to you need it and it's not there. And we just see it so much. We want to make sure you're taken care of the same way you're taking care of your baby, the business. We want to make sure we take care of you. So don't put it aside. Don't neglect it. You work too hard. You're worth it. Take care of yourself. Manage the risk. And I appreciate you letting me come on here and talk a little bit about my wheelhouse. So I appreciate
For
it.
sure. And it is easy to put it off. You think, oh, that's not going to happen to me. I'm not going to worry about it. But I just saw so many people, especially when it came to disability insurance, where people were put in a very precarious situation with their finances because they were on disability and they couldn't make as much money as they did previously. So, and it could
That's
be
a huge
something
one.
that's a huge one. And I know my husband is not a big fan of insurance at all, but I it's one of those things that you really appreciate it when you have it, when you need it. So thank you so much for your time. It is greatly appreciated. And I really thank you for being here. So
Thank you so much. I'm glad to be here.
again, I know this is a subject that most of us don't like to think about, but I love Jeffrey's approach to thinking about how you want your life to be and how that legacy can be left behind if you're suddenly no longer here. So, though not the most exciting topic today, I do want you to internalize this and realize that if you haven't taken care of these things, if you haven't set up a will, if you haven't gotten life insurance in place, then do that. Don't put it off. Do that. Contact someone today or tomorrow. It is imperative that you protect what you are working so hard for right now. The long hours, the sleepless nights. Make sure you decide your legacy and not someone else. If you want Jeffrey's information to learn more about his services, all of his contact information is in the show notes. He will be more than happy to help you get started on the process. Thanks so much for joining me on the podcast. I'm grateful that you took the time. Please feel free to continue this conversation with me on Instagram at Stitch for Success or join me in the Stitch for Success Facebook group. If you know an aspiring or early stage entrepreneur or side hustler wishing to turn that hustle into their main business, please share this podcast with them. Also, please rate and subscribe. Thanks again for listening. Take care and have a great one.